All right, what is up, traders? What's up, tycoons? Super excited for today's video. Lots to cover as always. We're going to jump straight into it. All right, we're going to take a look at XHE and XLV. This is the healthcare equipment and healthcare sectors. I pointed out in last week's video that we had the volatility contraction pattern. I'm really liking this chart pattern a lot here lately. All right, and it's actually led to over 100% gains on my XLV trade. I pointed out XHE doesn't really have the option liquidity that I'm looking for, so I would be going into XLV. And these calls have till September on them, and they're already up over 100%. So we're going to break down those charts even more in today's video. We're also going to look at some other things that I've been paying attention to. All right, I'm in a trade on SLV, which is silver. All right, and silver and gold move very close to each other, move very similarly, and the gold futures perfectly followed the analysis, came down to where I wanted it to. So we're going to break down what I'm looking at there. All right, we also have the TLT five-wave structure that we've been tracking. It looks like it has completed that five-wave structure to the downside and fell a little bit short of our targets here. Right, so we're going to see what the new structure is, where it's going to develop. We'll have a nice detailed technical analysis on that. We're also going to go into the Fed fund rate, the projections. We're going to go over some seasonal data right here, like such as the July market performance. All right, and then some really interesting data as well that played into last week's performance over the June OPEX flip-flop. Right, we have OPEX coming up again next week on Friday. So we'll dive into all of that. Today's video is sponsored by Simply Wall Street. All right, so if you guys want to, you can use the link in the description. All right, it's a really great platform. You get a 14-day free trial and up to 40% off for the first 100 people that join. If you're not a pro at fundamental analysis, they have their pros doing all of the work for you, and it breaks it down super simple and also gives you some nice, colorful graphs and charts so that it's easy to understand visually as well. You can always email me too for a one-on-one personal session at zackleytrades@gmail.com. I do lots of coaching sessions with different people. Okay. And it doesn't matter how much money you have, whether you have a small amount of money or a large amount of money. You can trade with hundreds of dollars or you can trade with millions of dollars. I'm not going to turn anybody down, basically. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, before we hop into everything else, let's talk about crypto, okay? XRP actually just passed its lawsuit, or they got a nice win in that lawsuit and in that battle with the SEC. All right, and we're starting to see crypto really raging, but the SEC is still sending mixed signals. Okay, and the reason being is because BlackRock is trying to get this, and many people have been trying to get this Bitcoin spot ETF. All right, but we actually just got the debut of a leveraged Bitcoin futures ETF, right? And that's crazy, guys. All right. So now there's a 2x leveraged Bitcoin futures product. All right. While there's still not, we still haven't even got the just regular Bitcoin spot price ETF. So that's really interesting. They're sending these mixed signals. They have no idea what they're doing when it comes to crypto or what they're going to do. It seems like they're finally starting to make some progress on it. But if we take a look at the weekly crypto asset flows, right, we're seeing tons and tons of money flow into crypto right now. And this tweet right here is really nice. I thought this was interesting. So now the asset managers who thought Bitcoin was cooked are jockeying to secure a position before the ETFs go live, right? And this is the BlackRock ETF that we're speaking of. But 70% of the supply is already in the hands of psychos who didn't even flinch when FTX blew up. Look at me in my laser eyes. The bidding begins at basically $1 million. Okay, 1,000K or 100K. All right. So just really interesting stuff there. I thought that this tweet was, a good summary, okay, of, basically, the tons of people that still held Bitcoin through all of that. And, just the crazy amount of flows that we're seeing into crypto right here via coin shares. Now, credit investors rejoice, okay? 62% of new junk bonds issued are secured, the highest rate in recent history. Now, good thing, as defaults are rising, the trailing 12-month speculative grade default rate was 3.07%. So if we take a look at secured junk bonds as a share of total issuance, we're seeing a really large amount here. And, we haven't seen that in a really very, very long time, right? I mean, if you look back in 05, it's really at historic levels right now. Now, when you take a look at pre-election years, okay, these election cycles are very, very important, right? The midterm election data and also pre-election year, and next year will be in election year cycle. I really like this type of seasonality and cyclical data. If you take a look here, since 1950, all right, we can take a look here, and the stats are very, very nice here. Okay, we're seeing 61% of the time it's up in July, for the Dow Jones, for the S&P 500. The Nasdaq is up about 50% of the time. The Russell 1000 up 63%, and the Russell 2000 up 54%. July has already started off green. So it's going to be interesting to see, what the second half of the month has in store for us. Now, when you look at the NASDAQ, right? So what I want to highlight here is basically this is where we're at, guys. Okay. We've reached this point now, okay, of 10 trading days in the month of July. And via the pre-election years, okay, which are going to be the dotted lines. So these are the dotted lines. You can see that the market trades historically bullish during this time, right? And we're seeing all of the indexes go up, and then we start to get around a peak right here. And then we start to see things fall back down, especially in tech. Okay. Now, tech has been leading the rally and leading the market for the past 6 months. So, it does make a lot of sense that things would cool off, and maybe they are finally going to cool off a little bit heading into the second half of July. So, when we looked at that last chart over here, you can see that really July is only about 50% chance, just over 50% chance that it's actually going to be positive in the month of July. So the big question is, are we going to see a huge fall in July, or are we just going to get a healthy pullback, for the latter half, right? So, I'll be looking, and, this is a lot of stuff that, I've been using a lot more recently. And, these first 10 trading days, guys, were very, very nice. There was lots and lots of opportunities there to make some money. All right. And right here, what we have is over the last 15 or 50 years, I'm sorry, there have been 17 which experienced a June OPEX flip-flop, a June quarterly OPEX preceded by a positive quarter and then a negative post-OPEX week. In 16 of those 17 years, the 3-week period ended June 27th to July 18th was 16-1 for an average 3-week return of 2.94%, with that time frame focused on the week before and 2 weeks after the fourth. Right. So, basically, again, we're starting to see that, the beginning of July is bullish, right? And this is another type of, data set right here showing that it's bullish, right? And it's showing the focus is on the 2 weeks before and the 2 weeks after the 4th of July. And after this, we might start to see things cool off. Now, that doesn't have to happen. Okay. But, if you didn't know some of this data and you weren't, long in the right stuff and going long on things in the market, because you were scared of things were going to pull back, you missed out on a pretty nice rally. Okay. And now potentially is that time when we're going to start to see things finally cool off. We'll have to see whether or not that's actually going to happen. We have earnings season officially kicked off on Friday. And so, lots of big earnings coming up. We have Tesla coming up this week. I know a lot of people are interested in that. But using this data, right, we can see here the date on this post from the Discord, right? This is on the 26th, all right? So June 26th, showing basically the 5-wave bullish structure that we were looking at, right, via the Elliott wave, okay? And so I posted a picture in the Discord of the Elliott wave that we were looking at, right? And so you see we get a 1, 2, 3, 4, 5. And the wave 4 right here is an ABCDE triangle correction. And that's exactly what we got here for our wave 4, right? We got an ABCDE wave 4, went long on the market there at this point, right? And if we take a look at where we are right now, we hit those wave 5 targets right here. Okay. You can see we had that wave 4. Okay. We got the strong breakout. All right, we came back, retested support, and then we had a strong push up, right? And so we were able to hit our targets here. Lots of people have been doing really, really good in the Discord. And, again, you can see that was on June 26th, okay? And now today's recording is July 16th. All right, and on the 14th, we came up and hit those targets here. So, really good opportunities if you know what to look for. Typically, you're going to start to see a move down now after completing your wave 5. So really wouldn't surprise me there if we do get some pullback, also lining up with that, later half of July performance. Now, AI has been the talk of the town, okay? And if we take a look here, and we see their actual stock performance and then their 12-month forward EPS, we're seeing that it's basically led to a 3 to 4% increase in S&P 500 earnings per share this year. All right, just from the AI boom stocks. And you can see their 12-month forward EPS also rising here, and the stocks really just going parabolic ever since the beginning of the year. Now, the secular trend says the bull market could last until 2035. I did a really good video on this, just covering like a lot of the long-term data. All right, but I just want to cover this right here. So market timers blow it again, embracing bonds on the eve of AI-driven stock rally. And so in the beginning of the year, you most likely were interested in bonds, right? They were finally paying good rates. Short-term rates were at 5%. Okay, so as trades go, it looked like a layup. In March, banks were in turmoil, Jerome Powell was jacking up rates, and a recession was all but certain. So you take cash out of stocks and put it in bonds where short-term rates were 5%. Now, while market timing sob stories are common, this one is notable for the breadth of the casualty list. Spooked by the economy and lured by fat fixed payouts, investors dove into money market mutual funds. And I covered this a lot, right? We saw a huge amount of inflows into these mutual funds and money markets, and boosting assets to a record of nearly $5.5 trillion in June, data from the investment company Institute show. Now, painful as it's been for all bond owners, stock traders weren't exactly poised to feast either. Equity exposure among pro managers spent most of the year cut to the bone, and as recently as March, U.S. ETFs tied to equities had absorbed $24 billion less in terms of inflows than their debt tracking brethren. That's evidence of significant investor alienation given how much bigger the universe of stock funds is than bonds, right? And so we're just seeing that lots of money, was not really in the stock market, okay? And everybody was flocking to these money market funds. They were flocking to bonds, to short-term treasuries, okay? And a lot of people missed out on this rally. Now, when you take a look here at the Fed funds futures rates, all right, we do see that they expect it to go up still, all right, but they are actually starting to price in cuts, okay, which is really interesting, right? If Jerome Powell comes out and says, which I don't think he is, but if he comes out and says, hey guys, we're not going to cut rates, until late 2024 or even 2025, then the market may have to adjust, because of right now they are predicting and projecting basically rate cuts in the future. Okay, they have paused. The market is pricing in a rate hike at this next upcoming meeting, and we'll see if they're going to continue to do pause and hike, or whether it's just going to be one last rate hike and then they're done and then they're permanently pausing. We'll see exactly what's going to happen. All right. But if you take a look, the secular bull market in bonds and balanced portfolios was really nice, right? The 60-40 portfolio is very nice. And we have the TNX right here. This is the 10-year treasury yield. And as yields go down, okay, bond prices go up. So if you're a bond investor during this time period, it was a very bullish environment. But look how much different this box right here looks than this, right? We're seeing a huge difference here, and we're seeing, we had a very long-term downtrend here, and that's completely been obliterated, right? And so, it's my opinion and my belief that we're going to be in a new environment now where we're going to see the 10-year treasury yield. It's still going to be pretty volatile. Okay, and I do think it can come down, but whether it's going to be an actual, strong long-term downtrend, I think that is over. And I think we're going to see a lot of sideways consolidation throughout this period in the future now is really what I'm projecting. And especially if we do actually get this higher for longer from Jerome Powell. Okay, Jerome Powell has been keeping to his word this entire time, okay, saying how they're going to keep raising interest rates, do higher for longer. And also really just saying, how what they're doing is going to change the standard for for a very long time and shifting environment. And they're basically saying like, hey, we had these basically no interest rates, really low interest rates, and that environment is gone, right? And I think that it could last for a lot longer than people are expecting. We see elevated rates and elevated yields in treasuries. Okay. Now, when you look at the role of demographics, all right, today's U.S. economic indicators suggest that the rolling recession might be turning into a rolling expansion. It seems the perma bears will have to postpone their imminent recession yet again. The housing market is recovering from its recession that started early last year. The manufacturing sector is showing signs of bottoming, and non-defense capital good orders, excluding aircraft, hit a record high in May. Consumer confidence is on the rise as job openings remain plentiful. Despite these positive developments, regional surveys of prices paid and received remain disinflationary. This supports our rolling expansion with disinflation scenario, which would confirm our rolling recession with disinflation scenario since early last year. The stock and bond markets seem to share our optimism about the fundamentals. So while the economic landscape is complex, the signs point to a rolling expansion rather than an imminent recession. Okay. And when you talk about the role of demographics, there's a $75 trillion wide hole in the theory that consumers running out of pandemic savings will sink the economy. Baby boomers collective nest egg. They had $74.8 trillion in net worth at the end of Q1 2023. They have just started to spend it. Okay. And people like Tom Lee, okay, he's definitely a big perma bull, and he really goes big into demographics and age cycles and different things like that. And he's got some really great data that I can explain a lot better if you just want to look that up. It's really good stuff. Now let's get into TLT. Okay, we're going to break down TLT as well as many other charts. If you guys are enjoying this video, don't forget to smash that like button, subscribe, and share the video. Okay, so other people can find the channel. All right, and find some really good quality content. Now, the main things that I'm looking at on TLT right now are going to be our MACD and actually the RSI. All right. If we're able to get a breakout here on the RSI and a curl over, TLT, all right, could potentially break this trend line right here that we have currently. All right. And I would expect TLT to come up to the 103 area and potentially even 106.29 if it really gathers some steam and momentum. Okay. But there's lots of work to be done for now. If this MACD crosses over and we break through there, those are going to be some possible scenarios, but this could roll over and we could reject this trend line here. All right. So we're going to see what's going to happen. We had a very explosive move to the upside here. A lot of this big move down, all right, was basically overreacting to the ADP. All right, the job number, the ADP job numbers, and then the NFP came out. All right, and inflation and CPI came out, and basically TLT has started rallying off of that data. Okay, overall, I do think we completed this 5-wave structure right here, and at which point you would be looking for an ABC correction to the upside, before starting a new bearish structure to the downside. We'll see what happened. Okay, we're rejecting this trend line right here. And we're just gonna have to see where things really go. All right, when it comes to TLT. If we zoom in or zoom out actually a little bit, something that I wanted to point out here is TLT has really gone nowhere for almost an entire year, right? If we take a look, okay, this is back in October of 2022, and we're back at those same prices right now, back at October 2022 prices. The bond market bottomed in late October, early November. All right. And, we've really just been chopping, right? Chop, 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 chop. Looks much different than the stock market. Okay. The stock market has pretty much gone like this, since bottoming. And meanwhile, TLT and bonds are really just chopping very much here, trading sideways. We broke this long-term, trend line that we had here, this triangle pattern. And, basically this right here was breaking all of the structure, right? We had an original, we've been tracking TLT for a while, 1 2 3 4 5 down. Remember I told you guys you would get an ABC up. Okay, that's what we got over here, and then you get another 1 2 3 4 5 down. We came here, hit those price targets, and then we got an ABC up right here, and we were looking originally for 1 2 3 4 5 down to these price targets here of 81 to 87. but we've broken that structure and really just been trading completely sideways here. So it's been very volatile, actually. All right, I covered in the last video that bond market volatility has actually been higher than stock market volatility. You can see that by looking at the move and MOVE, ticker symbol MOVE, and then looking at the VIX. Move is actually higher. Made a lot of money doing really good at trading TLT options. Because and due to this volatility, we're seeing almost 1% moves every single day in TLT. And if you're an options trader, that you really love that volatility. So keep a close eye on the MACD here. All right, that could turn into a buy signal, and keep a close eye on your RSI. If we break this trend line, that also could turn into a breakout. If we look here, all right, we do actually have an inverse bump and run pattern, okay, on TLT, and there was many people long TLT in the Discord, and essentially I've gone over the bump and run pattern a few times, but you have this prevailing trend, okay, and then you get a bump, and the breakout is the run, right? And so in an inverse bump and run, we've already completed, this part of the breakout, and you can see we're back testing this original trend line here that, we're looking at. If we're going to be able to get through this little zone, this little area of liquidity right here, then we could see TLT again, head up to that 103 area. The year-to-date anchored VWAP is going to be right here around 103.50. So 103 to 103.50 is definitely very possible. All right, but we have to get past 102.50. Now, I know it doesn't seem like these are big price levels. Okay, we're talking about 50 cents differences. But again, when you're trading and you're an options trader, and TLT typically has 50-cent option strikes, it makes a big difference. Okay. Now, one thing, if we look at our 1 hour MACD, all right, we did get a curl over. So we have this supply zone here in red, this area of liquidity. And we may not be able to get the full inverse bump and run pattern if this area of liquidity and this MACD sell signal on the 1 hour chart causes us to come back down. Now, one thing we can look for, okay, is we have our weekly and our monthly anchored VWAP here, okay, and that's going to be right around 100.5. Okay, so if these do drop down, okay, I would look and be interested and see how we react here at 100.5. Large money institutions, okay, and hedge funds and market makers, they buy and sell at the volume weighted average price, right? And so that's why we're looking at the year to date here up right around 103.50. And that's why we're looking at the week to date and also the month to date anchored VWAP here at 100.5. So these are going to be two very interesting points to see how the market reacts. If they act as resistance or support, we will see very shortly here in the future. Now, this is that inverse bump and run pattern on the 1 hour chart. Okay, I posted this on July 7th when we were looking at the setup, and you can see how it's played out, guys, right? So if you do ever want to join the Discord, the link is in the description. It's a small community, all right, and I'm in there. All right, we have the people who run it, Leon. There's lots of good members in there. All right, and really, really great analysis and plays, right? That XLV play is in there. Have an SLV play. We have TLT plays, SPX. We trade many different things in the Discord. This is that XLV chart right here. And man, it looks great. Okay, I showed you guys that we were up 100% on that. We went over the VCP pattern, volatility contraction pattern. If for much more simple people, there's definitely a triangle pattern here, these two trend lines, right? And we're very close to the top of the trend line, right? We did a very good job of bouncing at the 61.8% retracement level, right? And that's where we went long, was right over here. You see the risk to reward, right? Risking this much and potentially for a reward of this much. We're already up 100% on those XLV options. So we're going to see, do we get the breakout here? Okay. And now we have room. All right. If we reject it, we can still get stopped out with money and not leave any money on the table, get stopped out with profits. We're above all of the anchored VWAPs right here. Okay. We can see that the month today and the week today and also the yearly, we're trading above all of those. So we're going to see how that reacts. 132.7 and 134.86 are going to be some major resistance levels. Those are your, basically your retracement levels of resistance. You can see here, if we would have been able to break out, hold this as support, then we could have had a strong move to the upside. Okay, but we weren't able to do that really until we flipped 134.86 to support from resistance. All of this is still healthy consolidation to potentially continue the downtrend. You have to keep that in mind. That's how you want to use your Fibonacci retracement tools. You have the move down, retracement, continuation of the trend, right? That's typically how people use it, but you can also use it to spot reversals, right? So if you move up, retrace, consolidate, and then break through those retracement levels, you can spot a downside reversal. And if you move down, retrace, consolidate, and break through those, you can spot an upside reversal. I already mentioned the VCP pattern, volatility contraction pattern. We have the triangle pattern here, and we're going to look to see on our RSI, can we break out here and get a strong push to the upside, as well as a MACD buy signal. Those are going to be some of the things to help support me thinking that XLV could potentially go higher. If we don't get any of those, then we could end up seeing a pullback. Okay. Now, the reason I'm even showing these XLV and XHE is because I did a video about rebalancing, okay? And we take a look at that July performance data, and we see that, the second half of July hasn't really been good for tech historically in pre-election years. And so my thinking is, okay, well, I know they're not going to get completely out of the market. Stocks are on fire right now, and a lot of people are playing catch up. And there's a lot of catch-up trades out there. So I wanted to ask myself, where could some of that money flow into, right? And the healthcare sector is, caught my attention. Okay. And XHE is the healthcare equipment sector. Okay. And you can see here, we've already got a MACD crossover to the upside. We are very close to breaking out of this RSI trend line here. And we're already up here at the top of the trend line of our triangle pattern here for XHE. So it'll be really interesting to see how these play out. Again, trading above the weekly, monthly, and the year anchored VWAP here. Really good setups. Okay. Now SLV is one that I'm in. All right. I actually have 2024 contracts for March. We got an XLV and it was great timing. Okay. Look how well we held the 61.8% retracement level, guys. We have the move up, retracement, okay, and then continuation of the trend. Now, we haven't got the full continuation, okay? We need to break above $24, right? But we did fill our first gap up right here. That was very, very nice to see. And we're going to basically see if we can continue momentum here in SLV. Take a look at your RSI trend line here, right? Initially, we had some bearish divergence where we have a high, we have a slightly higher high, and then we have a high, we have a lower high. And so that bearish divergence ended up leading to a healthy retracement and pullback. All right. We came up, retested that trend line over here. We're not able to break out past it. Went down lower to our 61.8% level. And you can see here, we actually broke out of this RSI trend line. And we got a nice MACD crossover to the upside. All right, I did a whole video on gold and silver, really deep dive into it. And I've been, it's honestly been following the analysis beautifully, right? This is my gold futures Elliott wave. If you go back to some of my original gold videos, okay, this was the structure the entire time, guys. Didn't really have to change much of anything. We were looking for this 5-wave move to the upside. We hit it, and we've started our ABC correction, right? You see we had the ABC, and we bounced here right around the 61.8% retracement level. We're above all of the anchored VWAPs right here. So it's going to be really interesting to see, do we actually get a new 5-wave structure to the upside for gold and for silver, or is this a little bit of a dead cat bounce? And if this goes from an ABC corrective wave to a 5-wave impulsive wave, then we could actually be starting a downtrend, right? But from a risk to reward standpoint, it was very logical to get in right here, right around that 61.8, especially when, everybody was bullish right here on gold, right? When gold was making these highs, everyone was bullish. They were all betting on gold, and, telling you to buy. And then it pulled back, which I was perfectly expecting. It was due for this ABC correction to the downside, right? We also had bearish divergence here. We had MACD sell signals right here. I don't know how people weren't seeing this stuff and expecting it. And lately, in this time period over the past month or so, everyone has been extremely bearish on gold. Okay, so you have to keep in mind, when everyone's super bullish, maybe that's not the time to buy, and when everyone's super bearish, maybe that's not the time to sell, right? Your average retail investor and what you hear on the YouTube comments is not always going to be accurate. Okay, you have to do your own analysis, come up with your own thoughts, and formulate your own opinion when doing these things. All right. And so I've kind of just been weeding through the noise. I've been waiting to get into gold, waiting to get into silver. And it looked attractive right here. Okay. But, I saw that we were bouncing on the 50% for that B wave up. All right. And we did end up getting that C wave down. All right. Patience pays. You have to trust your analysis. This is what comes with years of experience. It's really trusting your analysis. Don't forget about today's sponsor, Simply Wall Street. It's a really great platform. You can get it 14 days for free. I don't see why you guys wouldn't do it. Okay. A free 14-day trial. It's got a really amazing website and an awesome app. All right. I've used them for a while and glad to have them as a sponsor. Don't forget, you can also email me for a one-on-one personal session at zachleytrades@gmail.com.